What an epic pump to start the morning. The US session was absolutely crazy today with Bitcoin pushing up into the 30K range. I mean, let's just sit back for a second before we talk about all the stuff that I'm going to talk about in today's video, like how big this run could potentially get, the altcoins that could potentially benefit from this Bitcoin pump, what it means for crypto, whether this is the start of the new bull run, all that stuff we're going to talk about. Let's just for a few seconds sit back and admire what a massive move this has been, and what a crazy reversal it has been. Now, to some, this may have come completely out of nowhere, but to technical analysts, you would have seen a pretty clear bounce off the 200 EMA here at the 25.2 range, which was in confluence with a key horizontal range that obviously, I outlined a couple months ago on the show, which has resulted in a massive move to the upside. Interestingly, that was also in confluence with my 4-hourly and daily charts, which bounced off this wedge formation here. So you see slight fake out below the 200 MA, not only on the higher time frames, but also on the daily chart. And then it actually held this range, pivoted from the lows of the wedge, and actually held the mid-range level, which was very important at 26.5, before having a retest on the next daily candle and continuing upwards. This was probably your zone to flip long, unless you had the balls to buy 25K. I'm going to admit I didn't have the balls at the time to buy at 25K, although I probably should have, considering this was a very key level. It was on my own chart. But I was lucky enough to pick off a couple longs on coins like Stacks, which I tweeted about, once we flipped this mid-range zone at 26.5. So I'm sitting okay, but if you did miss it, then don't worry, because in today's show, at the end of the video, I'm going to be talking about some of the altcoins that I'm potentially eyeing as the next potential candidates for runs in the context of Bitcoin's massive pump. And we're also going to talk about what this means for crypto and everything. And I also have a theory on where the market is going next that I have kind of been talking to a few analysts about in terms of a time frame for when we could see the next dip, because I know a lot of people are now sitting on the sidelines. They're going, I'm out of this rally. I've missed the rally. When can I get in? Well, don't worry. I have a lot of sideline capital too. I'm not all in the market. I'm still relatively heavy cash for my standards, and I think we'll get opportunities to get back in, and I'll explain when that could be the case as well. But the one thing to really note right now is Bitcoin is heading into major resistance at 30, but given the bullish trend over the last few days, I would not be surprised if we smashed it, although you have to keep in mind that still 30 to 31K does have significant resistance. But yeah, at the end of the show, we're going to talk all about my plan when it comes to that. Just want to quickly say that if you didn't watch this video, I would still recommend watching this. The last show I did, the massive altcoin move incoming. I mean, that's exactly what happened. A massive altcoin move did come. And for some of the altcoins we talked about in the show, for example, Stacks that I mentioned on that show and also on YouTube, could potentially be outperformers on the next run. Well, that's exactly what happened. Stacks, I think, had a massive move, roughly 40% from the time of recording, for actually 50% to the 82 cent zone. So for the ones that followed me on Twitter, well done, because I did post a link to a video that I did on Stacks. If you aren't in the Stacks long, on the next pullback, we'll come up with a plan there to potentially get positioned in this ordinals narrative. But yeah, I did post the link to all of you. Sorry for the ones that missed out, but that was a pretty good trade as well. And yeah, just got to watch the daily shows, I guess, if you want the alpha every day. What else is pumping apart from Stacks? Well, if we look at the current trends in the market, funnily enough, PEPE, some of the meme coins, are starting to gain steam again. I think just, a bit of risk appetite coming back. Whenever Bitcoin pumps, people tend to get pretty excited. So I think PEPE is kind of very synonymous with the retail sentiment of the market these days. Hence why it's up 40% today. But also some notable ones in here. For example, Bitcoin Cash, which is pumping off the back of the fact it was one of the 4 altcoins that was named in the new Citadel and Fidelity-backed EDX markets, which is a new exchange, which we're going to talk about today, which gave us a window into what altcoins are potentially commodities and what are securities, Bitcoin Cash being, I guess, in the eyes of those businesses backing EDX markets, potentially and probably definitively being a commodity. One of the reasons why it pumped. There also were a few altcoins that were also named that we're going to talk about. Obviously, Stacks being a top performer off the back of this Bitcoin ordinals narrative. if you guys watched that video that I tweeted and also the show, you would, yesterday I think it was, or 2 days ago on Banter, you would know that I am pretty big on the ordinals narrative in 2023, just like as a relative strength play, given the fact that you have to be pretty selective when Bitcoin pumps as to what altcoins you choose to hold and long. And the altcoins that tend to perform the best are typically the ones that have the strongest narrative at any given moment, Stacks being one of them, because I think Bitcoin DeFi and Bitcoin ordinals aren't going away, because especially with the growth of the Bitcoin network, the transactions growing off the back of obviously some hype behind the BlackRock ETF, I think that is a narrative that can see some strong performance. Obviously, we've had that over the last couple of days. Also something we're going to talk about later. So if you don't want to trade any altcoins, now that we get into the meat of the show here, you can trade them on OKX if you're obviously in a country that facilitates them. We do have a $30,000 bonus at the moment. So if you just sign up, make an account, you'll get a $10,000 mystery box. If you deposit more than $50, you get another mystery box. And if you trade, you can build up to $30,000 worth of trading capital. So basically, I'm not saying you're guaranteed to win $10,000, but that is the maximum prize. So you can win nothing, you can win 10K, but for those that want a bit of fun, that haven't signed up for an account yet, this offer is still eligible for you guys using the link in the description, of course. So good luck to anyone opening a mystery box. Okay, let's get into the show. Now you know what's to come. Lots of, it's a massive show. Lots to update you on. Lots has happened over the past couple of days. Probably been one of the biggest, seismic shifts in the market we've seen for quite some time in terms of sentiment. Because if you guys remember, just 2 weeks ago, people were panicking about Solana and ADA and USDT, and there was a lot of fun in the market, so people were scared. And also, the fundamentals of the market, I think, have also shifted. Not just the sentiment, it's also kind of being underpinned by what has been a pretty stark shift in the way TradFi has been approaching crypto. And it's not often you get this much news banked up in a 1 week period. I think over the past 3 days, we've had 5 or 6 major announcements, major headlines from big TradFi companies across the world announcing that they are either getting into crypto, filing for ETFs, or launching or backing exchanges. So it's been massive. So firstly, let's go through some of the major announcements we've got. Let's talk about individually what they mean, and then let's talk about what it could mean for the market as a whole. So, it's kind of funny. The timing of some of these announcements has been coincidental at best. I mean, just think about June 5th to June 6th. Remember the panic in the market at that time? You had the Binance, the Coinbase lawsuits, coming down, and there was a lot of panic about the future of crypto trading. But then on June 15, just 10 days later, BlackRock filed for its spot Bitcoin ETF. And then just 5 days after that, a crypto exchange, EDX Markets, a new exchange backed by some of the biggest TradFi players in the world, Citadel, Schwab, and Fidelity, launched. So it's very funny, just the contrast of having two crypto exchanges, two of the biggest crypto exchanges, having lawsuits filed against them on the 5th. And then just 10 days later, you have the BlackRock ETF, and then 5 days later, you have a new exchange launching. I mean, basically, the SEC's approach here is very clear. They basically intended to kill crypto, or put, the guys onto the market of the fact they were trying to kill crypto in order to usher in a new wave of TradFi dominance, where they can make life really difficult for the unregistered businesses, or the businesses that they deem, are dealing unregistered securities, and make life really easy for some of the big TradFi players that were sitting on the sidelines during 2021. Because you got to remember, a lot of these guys missed the run and they had FOMO that now want to get into the market. So now you have these big players like BlackRock, Citadel, Schwab, Fidelity, which we're going to talk about now, that are aggressively positioning themselves in the market. At least that's how it seems. But of course, these things just don't happen overnight. This is likely a well-developed and thought-out plan from potentially years back, potentially since the bull run. These things aren't easy to execute, and I think the SEC, although we kind of, say how stupid Gary Gensler is, and we say how dumb the SEC is, and we all like to complain, I think we have to admit that he's not a stupid guy. He is intelligent. Maybe he's not acting in the best interests of us all the time, of course, but in terms of acting in the best interests of him and the companies that he works with, I certainly think that this plan has been orchestrated and has been a pretty smart execution. If your goal is to get TradFi dominating the crypto space, this has been genius execution. Not saying there won't be ramifications, but if that is your goal, then the execution's been pretty spot on. Let the crypto market go into deep fear, sanction the biggest exchanges that are shilling unregistered securities, and then give market approval to the big players to dominate crypto. It's kind of the playbook that the SEC has been following, which, look, if you're an advocate of decentralization, that is probably going to piss you off a lot. But here's the thing, and here's the honest reality about the crypto market. Most people don't give a fuck about decentralization, and all they want to do is make money. So if your goal is to make money in crypto and you want to use crypto as a proxy to make money, then I don't think this news will annoy you at all. I mean, arguably for Bitcoin, long-term, in terms of just the sheer liquidity benefit you get of having, access to new retail and institutional participants in the market, it's huge, and it probably results long-term in way more growth for Bitcoin than if you don't have a Bitcoin spot ETF. So from a financial perspective, it's positive. From a decentralization perspective, the fact that, spot ETFs can allow for paper trading and also increase the centralization of where the coins are being held, that's obviously a detriment to Satoshi's vision. So I don't think Satoshi would love this, but I think if you like money, then you don't hate it. But I think 99% of you, and I may be wrong, probably are on the money side. I mean, that's 99% of crypto. Let's just be honest for a second, because I've seen a few tweets going, oh, it's bad for decentralization. It's this. It's like, but no one really gives a shit about that. Like, let's just be honest. Like, most people are in this market to make money, and that's fine. Just admit it and let's make money. I'm a little bit of both, by the way. If you want to know where I am on the spectrum, I'm like in the middle. I obviously really want to make money, but I'm also in the camp of like seeing the genuine use case for decentralization. But you can also make the argument that the US's desperation to control crypto also highlights just how powerful crypto is, just how immutable it is, and to an extent, how unstoppable it is because they've been forced to pivot. So that's another side argument to that if you want to go down that line. So what happened with BlackRock? Let's just summarize this for the people that don't know. BlackRock, who managed $10 trillion in assets, one of the biggest fund managers worldwide, took the first steps last Thursday to launch a spot Bitcoin exchange traded fund, which has basically been rejected time and time again from crypto players trying to enter by the SEC. Like, basically no one has been able to get a spot BTC ETF license, but BlackRock has an exemplary record here. They have a 575 out of 576 record of getting approved on ETF applications. So far, there's been 0 ETF applications approved for crypto players. So to say it has a strong chance of happening might be an understatement. I would say it's in the 99 percentile range of happening, which is obviously very positive because there are some huge benefits to the market if there is an ETF. Let's just list off some of the benefits so we're on the same page here of why this news is so massive and why the market is reacting. And then I'll also give a caveat to it. So the reason why it's so massive is because, okay, if you're in the US and you're a big fund, do you really feel comfortable holding Bitcoin that you need to purchase through, a dodgy offshore exchange potentially, or an exchange that, has some conflict with the SEC? Do you feel comfortable buying Bitcoin off them? All right, fine. Buy it off them. Hold it on your balance sheet. Have to keep custody of your own assets. Deal with the scrutiny that you get from your stakeholders for holding crypto because it's not widely accepted. Or would you rather wait for a registered product on the stock exchange that you can add to your balance sheet through traditional brokers that you already use and you already have partnerships with, in tandem with the benefits that you get from the increased stakeholder sentiment because it's now a regulated product? So like most institutions that kind of had a barrier to entering Bitcoin, let's say you're a company and you want to put 1% of your balance sheet into Bitcoin, it's now going to be a lot easier. It's going to be also a lot more liquid to buy something on the stock exchange than have to purchase massive amounts of Bitcoin through the market, especially, during periods like this, which are illiquid periods. So it's quite interesting because you could see a significant increase in institutional flows. But it's not just institutional flows, it's also retail flows. Now, let's be honest. Most people that want to get into crypto and want to hold Bitcoin, they already do. Fair enough. I already hold Bitcoin. You probably already hold Bitcoin. We already hold Bitcoin. So it's not stopping, it's not like it's impossible to buy Bitcoin if you're in the US, if you're a retail participant. But if you're older than the age of 60, 70, and you're not used to this tech, and you don't know how to sign up to an exchange, and that's not just saying just for 60-year-olds. There are also younger people that don't know, but typically the older generation that are used to doing things by paper on the stock exchange. Like even my dad's in that category. He really struggled to start up an exchange account and buy Bitcoin. How much easier is it going to be for them to be able to ring their stockbroker or, enter their brokerage account online and buy a Bitcoin ETF and have exposure to their Bitcoin? I mean, just think about all the super funds across America and Australia and every country, UK, etc., that can now put, 1% of their clients' assets into Bitcoin without having to deal with the rigmarole of having to custody it. So I think that's why the spot ETF long-term is structurally very good for Bitcoin flows, right? Now, the caveat that I was going to get to is this isn't happening right away, and this could take months to get approved. So what we are seeing now is a spot ETF hype. I think at some point this hype cools down as people realize this could take a while. Now, I've heard rumors that it could be expedited and done in the next 6 weeks. I'm skeptical that we'll see this before Q4. I'm even skeptical we'll see it during Q4. Now, that's just my opinion. I just know how the SEC works. These things take time. So there's no reason to bake in the net benefit of structural inflows in June, because the effects that you will see from those inflows will take years to be baked into the price. I also want to give you some perspective. The Bitcoin halving is in 2024, April. Typically, the Bitcoin peak during cycles is 1 year after the halving. So we are now in 2015 of the 2017 cycle. We are also now in the equivalent of 2016. We are now in the equivalent of 2019 in the 2020 cycle. So we're still in the year before the halving. So you guys remember the biggest bull run was in 2021. The halving was in 2020 in March. So we're actually, even before that, we're in the equivalent of 2019 if you look at the cycle theory in terms of where we are. So typically, what will happen is you'll see the halving happen, then roughly 6 months to a year later, that's when the biggest pump happens. Now, maybe because people are so aware of this trend, it gets front run a little bit. But the reason I'm bringing up that contrast is because this ETF is happening at a very critical time for Bitcoin. You're going into the halving. It's being announced. It's going to take months. But this launch could coincide with the halving. And then the flows coming in, which could take, as I said, a year to kick in, that's going to coincide when Bitcoin typically peaks. So I don't know if it's too good to be true, but it's kind of all lining up. And it could just be a coincidence, but a lot of this is lining up, if this does get approved, to hit at a very critical time historically for Bitcoin during the cycles. And that would lead to, if we're using the cycle theory, and look, it may not play out. I've been skeptical of the cycle theory at times, but let's just assume it does play out. It would result in a Bitcoin peak in 2025. So you have a whole lot of people panicking now that they're going to miss the bull run. Well, typical peaks happen a year after the halving, and that's still 2 years away. So we're 2 years early before that peak, if you take the halving cycle into account. Now, you may think, okay, things have changed. We might actually front run the halving. Maybe. But you got to remember the macro is looking shaky. We're going to discuss that at the end of the show a little bit more. The reason why I'm not aping a 𝗕𝗓𝗧 right now. But structurally, long-term, this is good for inflows. You have to make that argument. And look, you'll probably see the title of this video, why Bitcoin's gearing up for the biggest bull run ever. Some people might think, oh, that's clickbait. But I'll tell you why that could be the case. Look at the price of gold in 2004 on the date that its first spot ETF got announced. The first gold ETF was listed on the New York Stock Exchange, SDPR gold shares, when gold was $380. Gold is now 1.8K, and it even hit 2K. So gold effectively 5x'd in the decade following the ETF. Now, this isn't a coincidence. So there's a couple of reasons why it performed well, of course. One, you had the GFC, so it performed well during that period. Two, you had excessive money printing during 2020, so it performed well during that period. People like gold as an inflation hedge. So yes, you had the macro environment to facilitate a gold run. But the price of gold went up drastically more than other assets that were also considered inflation hedges, other commodities, and it also went up drastically more than stocks did over that period. The majority of stocks. I mean, the NASDAQ is a different story. That's completely off its chops because of the tech boom that we've seen. But gold outperformed a lot of assets during that period. The reason being, I think having the ETF allowed a lot of super funds, a lot of institutions, a lot of retail to easily access gold. I mean, how much easier is it to buy a gold ETF rather than having physical gold or having gold custodied for you and paying huge management fees and security fees and insurance fees, etc. Just like how difficult is it to buy Bitcoin, have it to custody it yourself and put it on a ledger and pay, transaction fees. It's the same thing. It's just ease. People are lazy. People want an easy way to get into Bitcoin. And to be honest, even I am searching for ways to buy Bitcoin on the stock exchange. Now, obviously, I'd prefer to hold my own Bitcoin, and I do hold my own Bitcoin, but there's money that I have. For example, if I sell some stocks, right, and I've got money in my brokerage account, and I don't want to have to take that money out into my bank and then put it on an exchange and buy crypto. It's easier for me to just have a percentage of my Bitcoin also with the rest of my assets, especially if I'm managing a super fund. So even to people like me that are really into crypto, there is a benefit to having a percentage in an ETF. And an efficiency benefit and a tax benefit, depending on where funds are situated. So that's one thing. Now, the BlackRock ETF is just the beginning of the filings. We saw WisdomTree, one of the biggest asset managers. They manage 87 bill, not as much as BlackRock, 1/10 of BlackRock actually, but still, 100th of BlackRock, but still a lot of money, 87 bill, not quite 10 trill though. Invesco, one of the biggest issuers of ETFs worldwide, also, who had a spot ETF, reactivated their spot ETF. So we're seeing them come into the market as well. And then something else very interesting happened as well. The launch of the new crypto exchange, EDX Market, backed by Citadel, Fidelity, and Schwab. So it's very interesting. 2 weeks after Binance and Coinbase get lawsuits, a new exchange launches. Not just any exchange, but one that is backed by the biggest TradFi guys in the business. Like Fidelity and Citadel are huge. They basically run the US economy in many ways alongside BlackRock and also Charles Schwab, who are seeking business to become brokers in digital assets. The venture EDX Markets quietly began executing trades in recent weeks. EDX is expected to announce it has gone live later Tuesday, which it did end up announcing 9 months after its backers unveiled their plan. So this isn't a secret. This has been around for almost a year, actually, that we've known about it. But the fact that it launched, that it actually started trading its 4 pairs a couple of weeks after Bitcoin and Coinbase was telling. Now, interestingly, I have an interesting observation here, which I want to get up. All right? And I'll talk about my ETH thesis later, which ties into this. But EDX Markets, the newly launched crypto exchange, is only supporting currently Bitcoin, ETH, Litecoin, and Bitcoin Cash. Only 4 assets. Now, would they list any of these assets? Would Citadel and Fidelity, who obviously talk to the SEC, run the risk of listing any commodities? I mean, the answer is pretty much no, right? ETH is listed here. ETH, there's been an ongoing debate for a long time that it's a commodity or a security. CFTC said it's a commodity. SEC hinted it's a security. But I highly doubt it would be listed on an exchange backed by Fidelity, Schwab, and Citadel if it wasn't generally reasonably assumed that it's a commodity. If this is the case, that is great for ETH for a couple of reasons. One, it's not going to be considered under the purview of the other alts, which are facing regulatory scrutiny, getting delisted off exchanges, which is obviously good for ETH exchange listings. But B, could this pave the way for an ETH ETF? I mean, if the Bitcoin ETF gets approved and ETH's also a commodity, then why can't you have an Ether if they just follow the playbook? Why can't they have an Ether ETF or a Litecoin or a Bitcoin Cash ETF? I mean, there's demand for ETH. It's more of a tech bet than Bitcoin. Sure, Bitcoin's more of a digital gold, but ETH's more of an exciting technology play. There'd be a lot of demand for taking risk appetite on in terms of an ETH ETF. I know it'd be popular. So let's just see. I'm not saying this will happen straight away, but I would not be surprised if this happens in the next couple of years. It's going to take time though. Bitcoin needs to get approved. SEC needs to do its rulings on what's a security. Binance and Coinbase need to go to court. I understand all that, but ETH as a commodity, this was just a little indication that we got through the EDX market announcements. Just for the technical nerds out there, it's not like Binance in the sense that they self-custody assets. They are a broker. So they basically facilitate the matching of buying and selling orders like a traditional exchange like the New York Stock Exchange or the NASDAQ would. They're not a traditional crypto exchange in the sense that they hold assets and they pay out through wallets. That's just something that they're implementing to mitigate custodial risks. So it's more of a brokerage website. But I think that is where the future lies for TradFi. TradFi would rather be the brokers. just like in the stock exchange, you have your crypto exchanges, and then you have your custodians. Interestingly, Coinbase was named as BlackRock's custodian, but you have your custodians which hold these assets for these companies. What else happened? Because there was a couple other big players that also had news this week. Deutsche Bank, obviously one of the biggest European banks, or the biggest, applied for a digital asset license in Germany as TradFi pushes further into crypto. Banking giants Deutsche Bank AG has applied for regulatory permission to operate as a crypto custodian in Germany, the bank said on Tuesday. The move came just after days after BlackRock filed with the SEC. So they want to custody crypto, basically, which is very interesting. So could Deutsche Bank custody for some of these other big players? Could this allude to other ETFs and financial products being launched in Europe with Deutsche Bank as primary custodians? I think so. I think that's what it's indicating here. And you also have to keep in mind that they're a huge company. Like, look, 1.3 trillion, actually 1,337 billion. So yeah, 1.3 trillion, $1,337 trillion worth of assets under management, which is absolutely massive. I mean, it's come down a little bit, but it's still absolutely massive. So they are a huge player as well. Now, there were a few other headlines as well, before we get into my kind of thesis here on altcoins, especially because I know you guys want to hear about what I'm doing, what I'm buying, what the plan is. I've got a pretty good plan that I've discussed with a few people. I'll run through today. But just before that, we've got digital assets and Fidelity about to make a seismic move, what was reported, into Bitcoin and ETH. I don't know the authenticity of this headline, but I did see it on a few news websites. I know these players are getting to Bitcoin. I don't think the ETH thing's happening yet, but that'd be good. Sources expect Fidelity to make a bid for Grayscale or launch their own ETF. Well, they did apply for an ETF, and I'm pretty sure they also bidded for Grayscale. We saw that they were offered $2 billion, reportedly, and 3 separate offers have been proposed by 1 public and 2 private entities. Maybe Fidelity, maybe not Fidelity, but all 3 offers were rejected. So as you guys know, Grayscale was the first Bitcoin futures trust. So it's not a spot ETF trust like BlackRock, which means you're not actually like buying Bitcoin 1-to-1. You are buying the rights to the Bitcoin, which should theoretically be worth the NAV value. But the reason why it's traded at such a discrepancy for so long is because of a few factors. Management fees being a huge one, given the fact that they don't know when a spot Bitcoin ETF will be approved. Do you just keep paying management fees that eats into your capital over that period until it's approved? And also, there's been a lot of Grayscale DCG FUD, obviously, especially during the FTX saga, which resulted in almost a 50% discrepancy. But this was the best opportunity to buy Grayscale. And even Rand said he was aping at the time into GBDC. He just thought it was an awesome trade. Is it worth the trade now? I don't know. You have to work that out for yourself. Minus 33 is definitely not as appealing to minus 47, but it's still a discount on a fund that's probably at some point going to get approval for a spot Bitcoin ETF. I think the theory here is, look, if BlackRock gets approved, the framework is now outlined for other major players to get approved. And if Grayscale gets approved, then that would mean that they have spot redemptions of Bitcoin, which obviously is going to be massive and result in this discount likely becoming closer to zero. So if you believe in that theory, this is basically a way to buy Bitcoin for $22,000 today instead of buying it for $30,000. So this is interesting. Am I personally buying? Well, no, but that's more just because I like to keep custody of my own Bitcoin. I did mention before that I would consider stop buying through an ETF, but it just hasn't reached the point where I need to do that or I want to position myself in that way. But this is definitely interesting. Maybe something you should consider this if it works for your portfolio. Of course, you got to work that out first. Okay, let's go into my market theory here. So let's just list what I'm going to be talking about. Firstly, I'm going to talk about Bitcoin dominance. Then I want to talk about my altcoin plans that is highly dictated by the ETH BTC chart. I have a plan here which lines up with Benjamin Cowen's plan. You know, it's funny because sometimes Benjamin Cowen and I have had arguments, and I know Rand has as well. But at the end of the day, we're both seeing the same thing here. Benjamin Cowen's timeline and my ETH BTC chart is basically the exact same, which I found interesting because I've had my chart for months, and some of you have seen it on the shows. Also, I want to talk about the ETH trade that could be pretty big heading into the end of the year, relating to the new ETH upgrade, which could be a narrative to watch, especially if Bitcoin performs well. This could be a rotation that I think could genuinely occur. Before we get into all that stuff, I want to remind you, if you do want to trade any assets, including obviously Bitcoin, ETH, but also commodities, also forex pairs, all that kind of stuff. You can do so on Prime XBT. This might be good for the guys that, were trading on Bybit, but now don't want to due to KYC constraints. Prime XBT could be a good option for you, depending on what country you're in. This could now make sense if you're looking for a new exchange to trade on, especially with the flexibility if you into commodities and forex and that other stuff as well, which is good. We do have a promo now, which is a 7% deposit bonus up to $7,000, or you can choose this, which I think for the ones that trade actively will actually be bigger depending on how much you trade, which is a 25% discount on all commissions. So you're actually getting much lower fees through using the link, but only if you use the link. So yeah, you can take the deposit bonus or the commissions. You can choose. I would probably do commissions if I'm actively trading. If I was just depositing cash and buying a couple spot positions, I would probably do the deposit bonus, depending on how much I was trading with. So link in the description to Prime XBT if you want to use that code and get a discount on your comms. Okay, let's get into some juicy stuff. I just want to go through the comments and answer a couple questions, see what people are doing. How's your TikTok going? My TikTok is Miles_finance. My other one was at 100K and then it got banned for no reason, basically. But that's TikTok. It's centralized and they just like banning people. I actually got banned for making a video about PEPE. Hundreds of other creators were making PEPE videos. All I said was PEPE's pumped 1,000%. I didn't even tell anyone to buy. I didn't say anything ridiculous. I just stated a fact. It's pumped 1,000%. And got banned because of that video. Other people, other big creators, uploaded 50 videos on PEPE and actually said, buy now, and they didn't get banned. So absolutely dumb, but my new account's doing well. So, if you want to follow that, you can follow that. Someone said screen is super blurry. It shouldn't be. Check your HD setting maybe, because we are streaming in HD. I don't think we should be too blurry. Miles, slow down. I just had a coffee. I can't slow down. I speak fast, but that's always how I roll. Someone said gym time. Well, you're gonna want to watch this last 10 minutes of the video later because this is very important stuff. Probably the most important 10 minutes of the video about to come. Someone said buy MicroStrategy shares. Yeah, I don't want to shill securities on the show, but it's completely up to you. Personally, I'm not. If you want to ask what I'm doing, I don't, because you're kind of investing in a tech company and Bitcoin. And if you just want Bitcoin, why not just buy Bitcoin? Why are you taking custody risk? And if you want to invest in the tech company, well, that's your prerogative, but then you don't want the Bitcoin exposure. So I don't know if it makes that much sense, but I think you can invest in their fund directly. Not 100% sure, but still. High chance BlackRock is not going to get it. I don't think there's a high chance at all Black Sails, because think about this. BlackRock has a 99.9% record. Well, you can work out the percentage. It's over 99%. 575 out of 576 applications approved. Why would BlackRock, the biggest fund asset manager in the world that has a lot of sway politically in the US, decide that they were filing for an ETF they'd get rejected for? They don't want the embarrassment of that. And they would have definitely asked all the right questions before they filed. And why did they do this now? And why didn't they do it years ago? Well, clearly because they were waiting for this SEC thing to play out. They wanted regulatory approval, and then they got it, and then they filed. I mean, it makes complete sense why they waited. And, okay, I don't think the SEC is going to go, oh, if BlackRock files, then everyone else is going to file, and then we're fucked. Like, no. If you're gonna do it, give it to the biggest player. Treat all the others on their individual merit and their individual cases, keeping in mind that the other ones, are going to have to follow the same structure as BlackRock. So I don't think there's a high chance they're not going to get it. I think it's the other way around. I think there's a 99% chance they're going to get it. And it would be an absolute shock if they didn't. It would be an absolute shock. Let's just look at a couple other things. All right, let's get into it. All right, let's get into it. Okay, first thing that is important is this. Okay, so I mentioned before, ETH being named a commodity. I mentioned that could pave the way for an ETF one day. But it's also important affirmation, I think, because the market, there was always that couple % chance they would crack down on ETH. And look, maybe they cracked down on ETH staking, but I don't think you can shut the whole of Ethereum down and call it a security. So I think this is more affirmation that you're pretty much good as ETH being a commodity. There's been rumors, JP Morgan suggested that they should come up with a new definition for ETH, like 50% security, 50% commodity. Maybe that means they regulate staking products. Ether, the token, is a commodity. Who knows? They might do something funky. But in general, this just raises my confidence as ETH being a commodity. That is actually pretty good for ETH structurally long term. If you look at things like, its chance of getting an ETF, institutions getting involved, clarity is exactly what you need. I mean, once again, I'll ask you the question: why would an institution hold ETH on their balance sheet if they know they're holding an unregistered security that could be significantly clamped down on? And why would they want to stake that product and run the risk of backlash or SEC action? They wouldn't, right? So clarity is how you get money through the door for these institutions. And that's actually, I've been saying this for years. I actually said this last year as well when, people saying, 2023 is the year of regulation. Yeah, it's been the year of regulation, and that is tough. And that's a bumpy ride for the most part. But once you do get clarity, whether it's the clarity you want or not, once you get clarity, that gives certain assets the license to pump. Because there's always going to be that skepticism surrounding an asset if it's not regulated. If it is regulated, even if it's not what you want, even if it's not exactly how we want it regulated, just the fact it is gives these institutions the ability to get in. They simply didn't have that before. Like so many institutions wanted to get into crypto, they couldn't, or they just didn't want to risk it. So look, Bitcoin clearly front running the altcoins off the back of all this news. Bitcoin pumps through the dominance, smashed through the top of this range here, smashed through. Now, if you were still in altcoins versus BTC, this breakout was your chance to flip, a very strong chance to flip. If you're flipping from alts into BTC now, you might not be missing all the trade, because I still think there is a ways to go for dominance. I still think it could push up to 54, closer to 60. Like, this train isn't stopping, and I wouldn't fade this dominance train. All right. We know once a trend like this gets going, you can't really fade it, but you have significantly lowered your risk reward. So there are other strategies you can implement to weight higher to Bitcoin. For example, new inflows into Bitcoin versus alts could rebalance your portfolio. Staking yield back into Bitcoin could rebalance your portfolio. Profits back into cash to buy alts at the level I'm going to tell you in a second could be another way. It's a case-by-case basis, but I wouldn't FOMO out of all my alts into Bitcoin in a panic. I would just be very cognizant of the fact this could run higher, and if so, you want to be positioned in a way that you're protected, right? Now, alts aren't bleeding against Bitcoin, which is a good sign. What you don't want is Bitcoin pumping and alts literally going down. That's not the case. Alts are still performing. Even if we look at the top 100, alts are still up today. So the market is moving together. It's just Bitcoin's moving slightly more. So this is a Bitcoin-led run, but if you are in alts, you haven't had a horrible few days. You actually had a decent few days. And the select narratives that I'm about to talk about, they've had even better days, and one I think could have an even better period later in the year. But the major thing that I want to talk about is ETH. That this is like my biggest point here. This is one of my favorite charts in crypto right now. It's one of the only charts I'm even looking at. And I've talked about this for a little while, but I want to reiterate this for the ones that haven't been watching the shows. ETH BTC is a chart that tracks ETH dominance. If ETH BTC goes down, ETH is getting cheaper relative to Bitcoin and vice versa. What we have seen is a downtrend on ETH BTC since September 2022. We marked the range high here at the 8.3 level. We had deviation above, and every single bounce has been a higher low since. Every bounce in Ethereum has been another chance to shift your money to Bitcoin. I mean, how many months for the guys that watch the shows have I been talking about this? You're probably sick of me talking about this now, but it's still just as relevant. Every single time this gets faded. Okay? Unless you get a flip and a reclamation. We thought maybe we're getting it here, but it was a fake out. And we came exactly back down. So it didn't change. It was still technically, till you clear this level, still technically another lower high. And also, ETH BTC is making lower lows. So what does this indicate? Well, ETH versus Bitcoin is in a downtrend, right? That's undeniable. But when do you make the flip? When do you flip heavier into ETH versus Bitcoin? And why does that matter for alts? Well, when you flip from, Bitcoin into ETH. When you flip from Bitcoin into ETH, well, ETH leads the alts. So that's also your altcoin buy indicator as well. So I use Ethereum as a proxy for the entire altcoin market in terms of looking at this chart. And for me, there's a really strong level which lines up time frame wise at the 5.5 level and also this 200 EMA. So what I think is going to happen, and I may be wrong and this may reverse, but what's the point of me doing these shows if I can't give you my opinion? What I think is likely to happen is Ethereum continues to bleed versus Bitcoin. Now, that doesn't mean Ethereum's crashing, but Bitcoin could outperform in an upward scenario. I think ETH will bleed against Bitcoin for the next couple months, and we're going to see a bounce either at this EMA, which is this red line here, or at the horizontal support at 5.5. These two levels are levels I'm going to start laddering in ETH versus Bitcoin. And at that point, I'm also going to start laddering into some alts that I think can outperform the market. And we're going to get into one of those really strong narratives in a minute here. This is my signal. I think this is a super strong zone. I'm very interested in the ETH BTC play. In this zone, you can even open up pair trades. So if you don't want to do a cash play with fresh cash into ETH, or you don't have Bitcoin to swap into ETH, fair enough. You can do an ETH BTC trade on Prime XBT. So that is an ETH BTC pair. I think it's also an OKX. And you'll be able to do the pair trade there. So that's another option. But for me, this is the level. Now, there's another scenario. Okay, let's say worst comes to worst. It doesn't get there. It stops just short of this level. Okay, that would piss me off a little bit. But it's okay. Because in order for ETH BTC to reverse, it needs to technically make a higher high. And it definitely needs to break trend. So what's going to happen first is it's going to break the orange line. It's going to start pushing to the upside. And you're going to get your first higher lows setting in. Once you get your first couple higher lows and a break and a retest, that is your signal to flip long if you miss. I do think we get here. But just in case we don't, that is the situation where you have an opportunity to get into ETH BTC again for a reversal play. And maybe takes a profits mid-range, flips back. And then we will decide what happens mid-range in January. This is literally a weekly chart, so it's going to take until January to play out. So there's no rush, but this is my macro chart that I'm looking at with a take profit zone up here for alts. So why is this interesting timing? Well, Benjamin Cowan, who's been, let's be honest, completely incorrect about this Bitcoin dominance rally, says he expects dominance to rally until approximately September. And I found this hilarious because then I went and looked at my chart, which I've had for months, and I saw that, look at the date at the bottom of your screen. This blue box is September, October. So Benjamin Cowan saying dominance is going to stop rallying in September. My chart literally has its bottom around September. Is it too good to be true? Well, maybe, but this is the most logical time frame for now. So for the guys asking, when do I go heavier into alts? That could be your most logical time frame if you want a support buy. Now, of course, there are narrative trades. We can trade in the meantime. I gave you a 30% stacks, no, 40% now stacks trade just a day ago. So those are great trades when the market's going up. Obviously, Bitcoin is a great trade at the moment. Even ETH in its USD pairs an okay trade. It's just if you want to go really heavy on alts versus Bitcoin, I prefer, instead of buying in no man's land, to buy support. So this is something I'm watching. Now, what could actually happen is this. Okay, this is just a scenario that I think could happen. Dominance keeps rising. Bitcoin keeps pumping. We see this go down a little bit. Then the market reverses. Bitcoin starts dropping because of macro factors in Q3. I still think we're going to get another big correction, by the way, in the stock market. I don't think it's up only. I think we're going to get a correction. And when the macro turns, the good news will also fade slightly, and that will be your big dip. So I think we're still going to get another big dip. That's why I'm fading this. That's why I'm not buying Bitcoin today at 30K. You guys know my levels. 26.5 was that entry. 30K is a much harder entry. You're either going to wait for a flip and a retest at that level, or this big correction slightly later in the year. But I do think that what can happen is ETH BTC goes down as Bitcoin pumps and dominance pumps with it. But then what you see is a bounce when Bitcoin drops because it's pumped so much. So it'll reverse a bit. Alts will catch a bid. And then alts will probably perform badly as Bitcoin corrects because they're usually higher beta correlated. And that is when we'll see this September low. If that plan plays out, I'm a genius because a lot of things need to go right there. I don't know if it will, but it seems logical to me. And I may get it completely wrong, but I don't know. It seems logical to me that that is the scenario that results in this October, September, August kind of low for ETH BTC. And look, if I am wrong, it's okay, because if I'm wrong, it's fine. We will just buy on the reversal and the first signer of a pivot, which results in a couple of higher lows. So pretty much comfy either way. Either we're going to get our fucking amazing ETH BTC buys, or we're going to buy the reversal. There's also a chance, obviously, it shits through this and just keeps dropping. Look, at that point, also will get wrecked. But the thing is, why are we buying support? Well, we're buying support because we know it's support. And you have kind of invalidation here below this wick. So yes, if you're not using a tight stop, you may lose an additional 9%. That's something I'm probably going to be willing to do on my spot positions as things go lower, as things break lower. Because if we start breaking below this level, well then we're probably going to 2 to 3 ETH dominance all the way down here. So it's actually okay if you kind of get stopped out in this range after buying the low. That's your worst case. Anyway, we're going to have months to mull over this chart because it's on a weekly, so there's no reason to make a decision today. I just want to contextualize my plan for you because a lot of people ask me, Miles, when are you going really heavy on alts? Well, the answer is ETH support is when I'll go heavier. My BTC weighting is much higher at the moment. In the meantime, I'm taking relative strength altcoin trades. I'm not loading up on alts. I'm still pretty heavy cash. And I'm just taking it day by day. I'm in a couple longs, Stacks being one of them, Bitcoin being one of them. Starting to actually close some Bitcoin positions into 30. I think we still see liquidity conditions start to become trickier from the macro perspective. If the stock market cools off its highs 10, 20%, you're going to see good news in the Bitcoin market start to react less positively. And maybe that also coincides with the spot Bitcoin ETF also getting less hype. Because you got to remember, it's fucking hyped right now because it's just got announced and the stock market's pumping. What happens when the stock market dips and the ETF news fades into the background as, people kind of forget about it because that's what tends to happen in crypto. People just forget about things. And then that scenario would probably create a little bit of weakness for Bitcoin. And that would be your really good buying zone on a big Bitcoin dip. Yeah, I just hate buying pumps. So if you're not in, I struggle to justify buying the pump. If you're a long-term trader, disregard this. If you're buying Bitcoin for 5 years, you honestly don't give a shit if you buy it 20, 25, or 30. But please don't buy alts and convince yourself you're holding them for 5 years. So whenever you buy an alt, be very explicit about your time frame. Because the problem is people convince themselves they're going to hold Matic for 5 years, and then Matic goes down, and then they're all upset. It's like, well, this was a 5-year trade. So if you really believed in it for 5 years, why do you care that it's going down? Surely you just want to buy more. You'd be happy it's going down. But I think people kind of convince themselves, it's a long-term investment. And then it drops. And then their conviction starts to waver. So that really just shows you it wasn't a long-term investment. You're just telling yourself it was a long-term investment. So it's the exact same thing with Bitcoin. If you're buying now and it's a long-term investment, I think, you're pretty much chilling. If that's your plan. I DCA into Bitcoin and ETH every single month. Obviously, I buy a lot more aggressively when things dip rather than the pumps, but I still DCA every month because it's a long-term investment. But in terms of trades, altcoin trades, and Bitcoin trades, buying to resistance typically isn't a good strategy. Now, I did mention I would mention one other narrative today off the back of ETH, and it's pretty big. And I'm going to talk about it more in the future because it's not something you need to ape into today, but it will be something prominent that I want you to research now before everyone else starts talking about it later in the year. So I mentioned that ETH in September could potentially start to pivot off those lows. That's kind of the rough time frame for now. And I'll keep you updated if it changes, of course, on the show, but that's the time frame for now. If that's the time frame, what's interesting is that also during Q4, probably a little bit later, probably towards December, we're getting the EIP 4844 upgrade, which is the Cancun upgrade. That is one of the biggest ETH upgrades in ETH's history, especially for the L2 market. Because what it's going to do is reduce L2 fees by an order of magnitude. So transacting on L2s is going to become that much cheaper. It would be very interesting if we start seeing a pre-run, because usually what happens with these like Shanghai upgrade and the merge and all that stuff is you see a pre-run before the upgrade. Typically starts a couple months earlier. That could coincide with this September timeframe that I'm outlining here, maybe even August, as kind of your pre-run for these L2s. So L2s are something, if we do get the next dip, on the next big dip, L2s I'm eyeing. Now, I did buy some L2s the other day. I started stacking them. Just want to be transparent. I started stacking Optimism and Arbitrum. But I would look at other L2s because I think this is going to be a trend. And I think have these on your watch list, and any big dip we get in the future, you kind of want to start positioning yourself for this EIP trade. Now, obviously, if we do get this move from ETH BTC to these lows, then this would be your opportunity to pivot out of Bitcoin into L2s and ETH. ETH will perform well ahead of this upgrade, assuming conditions are okay, and so should the L2s. The L2s are obviously Polygon, Arbitrum, Optimism. I think we're also going to see ZK Sync start to generate some hype. It's obviously the token's not out till Q1, presumably, but that's probably going to garner some hype as well. Some of these new ones, Starknet, etc. as well. But right now, what's investable? Arbitrum, Optimism, Metis. I'd say those three are very investable. And yeah, there are a few others as well. But if you look at L2Beat, bit of alpha here, L2Beat.com, you can see the entire TVL of the L2 market. And you can actually see where money is flowing. Obviously, DeFi Llama is a great tool for this as well, but I do like this website because it's pure L2s, it categorizes them, and it gives you their market share, which is handy. So start looking at some of these, but these can be the strong performers ahead of the Cancun upgrade. What is the upgrade? I'm going to do a video on this later, but essentially, on a high level, introduces a new transaction type called blobs, increases the data and storage requirement for blocks, and creates a new fee market for pricing blobs. Blobs. That's so funny. Separately from regular transactions. Additionally, it's a precursor of dank sharding, which will enable existing nodes to safely process more blobs per block than the initial maximum set out by EIP 4844. I'm trying to be serious, but the word blob is just making me laugh because it's just such a odd word. So this is the key point though. Do I have to say blob again? No, I don't have to say blob. Okay, this is the key point though for the L2s. Proto-dank sharding reduces the cost of posting large amounts of data to Ethereum and thereby lowers the operational cost of rollups. For the past 4 years, transaction activity on rollups like 𝗲𝗏 and Optimism has been growing. But this will essentially reduce the costs and save dApp developers over 99% of gas fees. These are the estimated transaction savings on Optimism and Arbitrum compared to Ethereum. Huge. So the goal of EIP 4844 is to reduce rollup costs through the introduction of a new transaction type known as blobs. But anyway, I think it's going to be very good for L2s, and this is why. This is the life cycle of a blob transaction. If you love blobs as much as I love blobs, then maybe screenshot this, have a read later. I won't bore you too much now. But yeah, L2s, TLDR, look at them. Could line up nicely with this ETH trade as well. Basically, the narrative here is, yes, this is Bitcoin's time to shine. Yes, Bitcoin's running and Bitcoin has its moment in the sun. But every percentage that Bitcoin increases in dominance is another reason to become more bullish on alts. I know that sounds crazy, but when dominance gets higher, the risk reward on the ETH trade gets better. The lower ETH gets to that support, the better it becomes as a trade versus Bitcoin. So I want to see dominance push higher, and I want to see the altcoin guys start to panic. And you're watching this video, so I hope you don't panic, but Twitter will fucking start panicking if dominance goes to 55, and they're going to stress, and they're going to worry. But I'm happy. Why am I happy? Because I have a plan. I've got my narratives ready. This is one of them, this L2 narrative. I'm ready to rumble with this BTC ETH trade, and when things look their darkest, from a dominance perspective, that's when things always tend to flip, and that's when the alts will perform well. Especially your Ethereums, which kind of, it's being called a commodity, but also has direct catalyst this year. Unlike some L1s, which we don't know the catalyst. That's why I think the ETH trade will outperform the near trades, the AVAX trades, because as far as we know, ETH has the catalyst there. I don't know if these other ones have them yet. And they could surprise announce stuff, but I just don't know if they fully have the catalyst yet. So that's why I'm pretty big on this ETH trade, and I think people are going to start fading ETH, but they'll be very unwise to do so. It's going to be pretty interesting to see. A lot of ETH faders are going to start coming out and say, I told you Bitcoin was the best. ETH underperforms. Bitcoin season, this will be a Bitcoin-only bull run. And that is when I'll become more bullish on ETH. I think you just dank sharded. Your opinion on L2 FDV? Yeah, I guess that's something Ran's talked a lot about, that he doesn't like the valuations. I disagree with Ran because I think in the short term, investors don't give much of a shit about FDV. I mean, Solana proved that, hitting 100 bill FDV. I do think they are slightly aggressive, but Arbitrum 1.4. I mean, market cap still matters more in the short term. FDV does matter, but it matters a lot less than you think. If the market is so inefficient. Especially when there's a narrative, things just pump for the sake of it. If you want something with a slightly lower FDV, Optimism's interesting. Of course, it does have a lot of supply coming, but the major unlocks happen. It's fairly linear from now on. Metis could also be a good play. I mean, a lot of these will just be narrative plays. So who gives a fuck if Arbitrum's FDV is high? Because you're not holding this. If you're trading this Cancun upgrade, EIP upgrade, you're not holding Arbitrum for the next 5 years. It's probably going to be like a 3-month trade. It's probably going to be a Bitcoin ETH reversal trade. So it doesn't matter if the FDV is high. It's all about just how much you can pump in the short term. Same as Optimism. Does it have unlocks? Yes, but you're not holding it for 5 years, so you're not going to see that dilution wreck your holdings. You're only going to see a fraction, 5 or less % of the dilution. 𝗕𝗏𝗃𝗃 is interesting. I don't think it's a bona fide roll-up, more of a trading solution. Metis, I think, will run just because it has hype and it's an optimistic roll-up. Yeah, obviously looking at some of these others. Loopring, I will punt. I'm going to probably go 90% in the safe L2s, but I will probably take punts on the little L2s, the tiny ones, just as a complete gamble, with 10% of my bag, just in case I can catch like a higher upside on one of them, but largely I'll go safer. I may have effed up my plan, so I will stress. Just come up with a plan so you don't have to stress. Cool. Well, I think that summarizes it. I talked about a lot. I'll keep you updated on everything. When I'm buying, what I'm doing, of course. I'll keep you updated. For now, just enjoy this Bitcoin rally. Look, I know it might annoy people that are on the sidelines, but as I said, Q3, it's not necessarily going to be the most bullish month for macro. It could shock us all, but at some point, I think the stock market will start to cool down. It's probably already going to be reaching that point soon. Bitcoin as well, heading into resistance. No reason to panic. And we have a pretty clear plan with ETH BTC and some of the altcoin narratives to get in. In the meantime, you can catch pullbacks on the really strong alts like Stacks, which I gave to you a couple days ago. Those kind of coins can perform well in the interim. If not, you can just trade the key levels on Bitcoin. It's really that simple. And if you're a DCA like me long-term into Bitcoin ETH, you're probably enjoying this nice reprieve, this nice, we can actually check our portfolios and things look good. So that's also great. So that's my summary today. I hope you guys enjoyed the show. We covered a lot of ground. I want to remind you quickly, if you want a place to store any of these coins, or trade on their L2, because they also have an L2, CoinWeb wallet is launching soon. It's going to be a great wallet. I've had a chance to see the test run of their wallet. It might be something that I actually use when it launches. Well, it will be something that I use when it launches. And you can also hold cross-chain tokens on it, which is a new interesting feature that something like, MetaMask doesn't allow you to do. So if you want access to it and potentially win $1,000 worth of their token, which is actually an L2 token on here as well. Where is it? I've just lost my L2 page. Where was it? It was actually, they have a token here. Now, I'm not shilling the token. I just thought it was interesting that it was also there as well. But if you do want access to the giveaway, all you got to do is follow them on Twitter, join their Telegram, and join their quest board. Just these 3 steps using the link in the description to potentially win $1,000. So if you have a bit of spare time today and you want to enter that, you can enter that. But I'm also looking forward to their product launch too. So that is that. And I'm just going to go through a couple more questions and then we'll head off. Polkadot. TLDR. It is very intriguing to me that DOT was... It's intriguing to me that DOT could fit into this non-security SEC safe narrative. So I think it could be a relative strength trade. The only thing I don't like is I'm not seeing great things from the ecosystem development. I'm just not seeing products I like. And until then, I'm not going to be a mega bull on DOT. But as a trade, it could come good with this SEC narrative, but it hasn't shown relative strength to indicate that yet. It was still an underperformer versus Bitcoin relative to the other alts during that pump. Don't forget to use the stop loss, of course, whenever you're trading. Whales are buying ARB. I personally know some whales that are buying ARB. Now, I wouldn't consider myself a whale because I don't know how much money you need to be a whale, but probably more than me. But I think a lot of whales are buying ARB because I've spoken to a couple pretty big fish and they're pretty bullish ahead of EIP. So yeah, let's see what happens. I don't own that much ARB. I really don't. I'm holding my airdrop, which was like what, $5,000-$6,000, holding that. Also done a bit of DCAing, but hardly. But I'll look to change that in the near future. Okay, everyone, thanks for joining. Someone said thoughts on Matic. I think that's also going to be a beneficiary of this EIP thing as well. I will see you in the next video. We'll talk about that more. And yeah, I'll see you later. Hope you have a lovely day. Peace out.